Hi, thanks for tuning in. This is the ASX and Sectors weekly chart analysis for the week ending 12th of June 2026. The first chart, as usual, is the S&P ASX 200 index. This is the XJO, the parent index for the Australian Stock Exchange. And it was quite a week, really. The market pulled back early, and on the daily chart, you could see quite clearly that there was strength coming in, buying support emerged, possibly accumulation. And then in response, towards the end of the week, the market really accelerated higher. You can see that with this week's relatively wide spread, the positive close, and it was a 4-day trading week, but volume was almost average. So you could say there really was elevated volumes this week. The chart is looking a little messy here at this point in time, through here, with the strength of the market being tested below the lows of this little intermediate range. And then this week, the market pushing above that level, with the previous week making an attempt to challenge that level, but failing. So it's a little bit messy. You've got the highs of the overall range here, and the lows down here. And that corresponds with, here's the major levels that we're looking at. You can see that forms like a zone of resistance. The market respected it quite well through here, attempted to challenge it over here, eventually failed. The market pushed up to it here, and now it's consolidating just below in the shadow of that range. We'll see if the market's strong enough to push up to the highs of the range in response. You'll generally get a period of consolidation after the market really pushes higher with a wide spread like this, and that'll be supply being drawn out in response to the higher prices, and you'll see an indication of the strength or weakness of the market by the depth and duration of the consolidation period in response. So if the consolidation period, for instance, is right up high here, the market just pulls back, maybe consolidates for a day or two, and then attempts to push higher, the market will be considered far stronger than if the market has to pull right back and have a much deeper and prolonged period of consolidation before it's able to push higher. So use that as an indication, the depth and duration of the pullback in response to the supply that will inevitably be drawn out in response to the higher prices that emerge later this week. Next chart is the mid-cap sector. And the mid-cap sector is comprised of the bottom 50 stocks in the ASX 100 index, lows of the range, highs of the range, little zone of resistance, intermediate level through here. You can see the market pulled back, tested the strength of the market below the previous bar's low. Strength was found. The market defended against supply at that level, and then price pushed right up to the highs of this intermediate level in response. Same thing goes here. The depth and duration of the pullback in response will be a clear indication of the underlying strength of the market. This is the small ordinary sector, and they pulled back and recovered somewhat this week as well, showing some form of shakeout instead of pushing back above the previous bar's high. This market clearly tested below the previous bar's low, and it did recover, but it didn't push as high as the previous two markets. There's your zone of resistance there, with the breakdown line here and the highs of the range here. So that's the breakout level. The market's trading sideways in consolidation mode. You've effectively had two shakeouts now. And I expect if the overall market continues to show strength, this market will push up to the important level, as will the broader market. This is the ASX financial sector, easily the largest sector in the Australian Stock Exchange. This market did test below the previous bar's low this week, similar to the rest of the market, and it was able to recover. Price continues to trade within this widespread down bars range, where buying support did emerge at the lows. This bar was formed when the RBA announced a change to the interest rate target. Lows of the range come through here, highs of the range, or the intermediate range through there, highs of the overall range up here, where supply has been drawn out when challenged in the past. This market continues to consolidate within the range of this widespread down bar, where the market broke down from previously, and it's trading both sides of that bar's close up to the highs of the range, and it's come back and it's tested the lows of the range now and found strength in the market. So this is the market in consolidation mode, absorption mode, possibly accumulation mode. We'll see. You only really know that in hindsight after the move's been made, but you can suspect it, and we will suspect there is some accumulation going on down here adjacent to this level here where the market consolidated previously. This is the ASX metals and mining subsector. It's effectively the miners, and this market pulled back this week and recovered, as it has done previously in response to weakness when it's emerged. You've got the highs of the range. You could mark them there or there, either or. That's your resistance level or resistance zone. Strength was definitely found down here. The market pushed up to this level here. And since then, the market's been trading sideways. There's been some attempt to push higher. And each time supply has been drawn out, the market has come back and it's tested for supply or shaken out and responded back to this equilibrium level through here. So the market continues to look relatively strong here, despite the fact supply has been drawn out above that level twice previously. If there was real serious weakness there, the market probably would have begun to break down by now. And it hasn't done that. It's holding on, and it's attempting to absorb supply that's being drawn out. You see that in these two shakeouts that drop back fairly deeply, but then recover by the end of the week. So the market's defending this level. It's absorbing the supply that's being drawn out, and generally that means there'll be an attempt to move higher in response. The ASX gold sector is looking a little vulnerable at the moment. It did pull back below that bar's low there, where the market was attempting to consolidate. It's dipped below. It's recovered most of the lost ground, but it hasn't really recovered properly as yet, and that leaves it vulnerable. You've got a level through here that the market's respected previously. You can see how the market respects this level. And even more recently. But the market's dropped below that level this week. It's attempting to recover. We'll have to wait and see whether it's going to be successful or not. But the fact that it didn't actually recover back above that level suggests the market is a little vulnerable at the moment. So just have to watch the response to that. You would like to see the market just move back above that level and then hold on and perhaps consolidate above it. If the market was to continue lower, this is the next level that you would look at there. And that's only modest support there at best, but that's the next level. So we'll see how it goes and monitor the price of gold itself, which this market reflects pretty strongly. The ASX energy sector hardly moved at all with all the rest of the market's broad movement. This market just traded inside the range of the previous bar this week, almost like a hinge from which a larger swing can develop. Lows of the range through here. Here was the original lows through there, which were broken. The market's really in consolidation mode, after a fairly good rise in price more recently. So there's not been a great deal of damage done, really. Spread did narrow considerably this week. Remember, it was a shortened trading week, so it may have been below average volume, but it wouldn't have quite been as low as it appears. That was a 4-day trading week. The market's traded in this range now for 5 weeks in consolidation mode. It's had the opportunity to push lower, but the market's effectively been too strong and supply has eased considerably. You can see by the volumes. Look how the volume was high here. It continued to reduce. And now it's going sideways, even slightly lower again, remembering this week was a shortened trading week. So selling pressure appears to have eased, and that's generally the aim of a pullback and consolidation following a sharp rise in price. And it would take some fairly decent weakness now for the market to break down. The opportunity's been there. Look at this bar and this week's bar in particular, this bar here. The market could have continued lower. It hasn't done so. It's attempting to consolidate sideways and perhaps reaccumulate. The next level down is here, and the market's well above that at the moment and holding on pretty comfortably. This is the healthcare sector, and they didn't do a great deal this week, which is not surprising really. This market's quite weak at the moment. It continues to break down. There's been a series of attempts to consolidate. Those attempts have all failed. The market's trading within the range of this bar now, and we'll need to see a significant change in sentiment and significant buying support emerge before you'd really like to enter this market to the long side. This is the ASX industrial sector, and it pushed higher, quite considerably higher this week. Here's the breakdown level zone. Highs of the range line up with that pretty clearly. This market's pushed higher in response to the period of consolidation we've seen recently. There's likely to be supply drawn out from the left through here. So you'll get a good indication of the actual strength of this market with the depth and duration of the period of consolidation in response. A relatively short, sharp and shallow period of consolidation would suggest a far stronger market than a market which pulls back quite deeply and has a prolonged and extended period of consolidation prior to any attempt to recover or push higher. But that was a pretty strong move this week. We'll see how the market responds to it next week. This is the ASX consumer staples sector. Generally a defensive sector, but it grabbed a bid more recently down here. We noted it at the time, and even last week we saw some buying support come in down here, and then a push higher later in the week. And this week, in response, the market's moved up to the highs of the range. Volume was average, despite it being a shortened trading week. So there was some value being seen down here at the lows, and the market's responded to the buying support which came in down there. Remembering the lows of the range are through there, so the market did dip below the lows of the range. That offered a buying opportunity to the market, which it's obviously taken. It's pushed back up to the highs of the range. These are the overall highs here. You've got the nearer term highs through there. Corresponds pretty nicely and forms a little zone. This is another market where you'll need to watch carefully to the response to gauge the actual underlying sentiment in the market. A short and sharp period of consolidation right up high in the range would be considered far stronger than a period of consolidation where the market has to dip lower and form a much more sustained period of consolidation. This is the ASX consumer discretionary. It's been a little stalled out more recently, but it did catch a bid this week. We've noted that there was an attempt to consolidate and possibly accumulate down here. And that's what's been taking place more recently. And with the strength in the market this week, especially later in the week, price has pushed higher in response. Now you've got the breakdown line above up there, so there's still some room to move. We did suggest more recently that if the market did attempt to break out, there wouldn't be a great deal of resistance through here. The resistance is back up here, possibly a little more in this little zone just there. That's pretty much where the market's pulled back to this week. A little bit more resistance there than there was through there. But there's certainly going to be more resistance up here if the market does actually challenge that level, corresponding to the congestion through there. So the market's moved to a fairly logical level. It's broken out above this period of consolidation, possibly accumulation, and it's done so on pretty good volume for a shortened trading week. This is the ASX property sector, and the market did push higher this week. It didn't test below the previous bar's low like many of the other markets have done. It was just holding on and then pushing higher later in the week on about average volume, quite good volume for a shortened trading week. You've got the breakdown line through there, and the secondary breakdown line up there. There is expected to be some supply here and more supply up here. The market has pushed above those three bars in what is a much stronger move than we've seen more recently. When you put the breakdown line in, you can see how the market's really pushed up through that level. There is going to be some resistance felt here, almost certainly. We'll just have to see whether the market can consolidate above the breakdown line here, or whether the market needs to come back more deeply to consolidate. And that'll again be an indication of the relative strength of this market. Just back to the parent index quickly before we finish up. You can see how the market has pulled back below the previous bar's close quite strongly this week. If you actually look at the daily chart just quickly, here's the daily chart. You can see on these three bars in particular, strength was found. This is like a shakeout here on increased volume. The response higher showed you where the buying was taking place, and then there was a pull back through that bar's range, tested the strength of the market's low, recovered on, again, above average volume, and then today the market's pushed higher and adjacent to that bar's high here. This was a pretty good move. You had strength here over 3 days. On my daily report, I did suggest it was possibly accumulation. There was certainly buying support in there, and the markets responded quite positively today. Back to the weekly chart. You can see how the market has pushed below the previous bar's low. In fact, it's pushed all the way through below all those bars lows there. It's pulled back, and then buying support's come in. It's recovered clearly, and then on Friday it's pushed higher. This is the intermediate level there. Highs of the range up here, lows of the range down here. You can see the market had pushed up and above that level, the important level. And we're going to now have a look at how high up in the range the market can consolidate, or how deep it has to pull back to consolidate. And from there, we'll be able to have some sort of indication of the actual strength of the current market and its sentiment. Okay, thanks for your time. Back again next week. See ya.